YouTube as well, so we can just see a little bit of if people will join all the way from YouTube. So let me share the link to people who are not here right now. All right. So I welcome everyone again to this class, and then let's just dive straight into what we have today. So basically, the whole idea of what's it called now of forex trading actually developed from the fact that you know we could be able to just look out for certain opportunities which is built off of supply and demands. Also, we can also use the idea of having to just want to speculate movement on the market based off of what this particular supply and demand. Do you understand? But of course, the major things that actually move the market actually is the basic thing we all know, which is supply and demand. So the supply of this versus the demand of it, as along the line and so on and so forth, are basically one of the things that actually does move the market towards where we want it to go. So when it now comes to trading this market, we can see that the whole market ideology has actually been built off of highs and lows, lows and highs, and so on and so forth, right? So now, if we pay attention to this, we have to know that there are certain things that have actually played out in the market and that we need to call our attention to as we advance towards the whole forex trading journey. Do you understand? Now, along the line as you keep growing, you keep encountering, like you keep seeing different shifts in market movement, and then you keep seeing different what's it called now different ways at which the market is presenting itself, and so on and so forth. So, but before then, what will you do precisely? What will you do precisely, and how will you react to certain moves when you don't have access to classes like this, except you go ahead and just do certain research on your own? But if you still have access to classes like this, what do you do? And it is expected of me to be able to teach you how to actually get to understand this shift in the market. So I'm going to blind out a whole lot of things. Um, Let me look for. Let's close out the grid lines. I want us to off the grid lines, so we'll be able to use it as a whiteboard just to write stuff. Okay, good. So now we have the chart playing like this. Now, when it comes to understanding trends, we have to pay attention to two things. Okay, number one, which is basically something called the higher highs, lower lows, lower highs, as well as lower lows. Now we want to pay attention to these things now, okay? Because I'm going to be drawing something. Just pay attention. Good. So now we have this. Now we want to also draw out a kind of a box here to be able to just have this particular understanding of the whole thing. See that? So now, higher highs, lower lows, lower highs, lower lows. Now, for the higher highs, basically, this actually means uptrend. Do you see that? Now, for the lower lows, for the lower lows, we use the lower lows to identify what's downtrends. Okay. Now, downtrend signifies selling opportunity. Mm, selling opportunity, while the uptrend signifies what? The buy opportunity. Okay. So when you have a uptrend, you want to pay attention to more buys. When you have the uptrend, you want to pay attention to more buys. When you have the downtrend, you want to pay attention to more sales. Okay. So when you have uptrends, downtrends, lower highs, lower lows, and all of things like that, you can be able to actually use it to do what? Determine certain moves in the market. So now, for the higher highs and which is basically the uptrend, this is how you can easily identify them. Okay, you can easily identify them when you see price actually forming movements like this. Okay, then for the lower highs and lower lows, you actually identify them when price is forming something like this. Now, when you actually have something like this, and then you are able to identify these two things, the last thing you also want to identify is what does this particular two uptrend and downtrend, what do they literally have in common? What do they literally have in common? Both of them have something called break of structure, as well as the CHOCH, which is the change of character. And then with these two things, you can be able to identify a trend. Okay. Adding these two things in combination with everything here, you'll be able to identify the trend of the market. Do you understand? So I'm just going to go ahead and take my arrow. So this here points down, then this here points here. So BOS, break of structure, let me write it in full. Break of structure here. Then CHOCH is basically change of character. I hope I'm making sense. Are you guys following me? Am I making sense? Am I making sense, guys? Am I making sense?
Yes, yes, I'm following.
If you're watching on YouTube, you can go ahead and just write in the chat box. I want to know if you're following me. Am I making sense currently? Am I making sense? And I hope everyone can hear me. If you're watching on YouTube right now. All right. So with that, I will just continue what I was explaining. Now we can go ahead and now go into the charts. and understand how all these particular things are actually mapped out on the chart. Okay, so if you want to take a screenshot of this, you can go ahead and take a screenshot of this. Then um, let me know if I can continue. Can I continue now? Have you taken a screenshot?
Yes, you can. I've taken it.
All right. So I'm going to delete all this right now and then reset my chart. Now, good. So first thing first is you want to understand that for you to be able to know the overall trend of the market, you want to focus more on the higher time frame at first. Okay, you want to focus more on what the higher time frame at first. Now, let's look back to November last year. We had price moving all the way from this point here. We had price moving all the way from this point all the way to this point. Okay. Now pay attention. We had price moving all the way from this point to this point. So now for the fact that we had price moving all the way from that point to that point, what can one deduce? Like what can you say is actually the what's it called now? The major moves that actually happened. Will you call it a downtrend or an uptrend? What will you say? So what will you think it is? Does it look like an uptrend or a downtrend to you? What does it look like to you? What does it look like to you? Good, an uptrend. So we have an uptrend right there. Thank you, Karim Tolani. Thank you for that. So the fact that we have an uptrend there definitely signifies that whatever we would actually do, starting from let's say we moved all up to the Thursday, 28th of November, we should actually be looking out for opportunities to buy rather than looking for opportunities to sell. Okay. Now let's just focus more on these particular regions and let me actually demarcate this chart right now. So we are going to start from here and then we are going to just stop right here. Okay. So now looking at this, basically everything that I wrote down for the uptrend and downtrend actually played out here nicely. Now, how do you identify an uptrend? First and first is understanding how to identify an uptrend. An uptrend consists of what? Higher highs and higher lows. Higher highs and higher lows. That's how to identify what? An uptrend. So if we start from here, which is this very first point, we saw that price created this high, then created this low. The fact that this low is higher than this low makes us understand that what price is about to what start an uptrend. And the fact that this high here is higher than this previous high definitely tells us that what price is currently in what in an uptrend. Now there could be a little bit of a tweak in the whole system, but you have to understand that along the line you want to be able to adapt to the possibility at which of which the market is presenting to you. Do you understand? But now let's look at this low. We had an equal low as this low as of this point. Then we had a lower high. Then we had a lower low, which this low actually took out this low. Now, one could have actually said this looks like a head and shoulder pattern, but then again, the market moved, found its way, taking out this high, which then now tell us that what again, an uptrend is about to start, created a low here, which is higher than this low, then created this high, which is higher than every other high that we've seen so far. Do you understand? So now I'm going to pause here. Pausing there, we can easily see that whatever we would actually want to do in the market at this point, okay, starting from the fact that we saw price actually created this high, we should actually be looking out for more buys, at least from this point to this point. There shouldn't be anything that should be telling us we should sell. Okay, everything we should look out for is what, more buys. So when we have more buys, it definitely what, it definitely gives us substantial amount of profit rather than going for the sales. Now, if you pay attention to the move, you will see that majority of the moves that actually move further, like in the sense that more pips, you see that it's the buyers. You can see from this point here, the buyers actually moved over 750 pips. You see that? Now, if you now look at how many pips the seller moved, you can just see the sales, which is the red candlestick. They just moved down, which is just so probably 222 pips, which is just little compared to 700 and something pips. You see that? And if you look at this point as well, from this region here to this point, we can see the buyers moving over 290 pips or 300 pips above here, 350 pips precisely. So now, all these particular moves are basically just based off of the fact that what, we could see and identify the fact that price was actually taking out highs. Now, pay attention to something. The act of the market actually breaking out certain highs leads to what we understand as break of structure. Okay. Now, this particular eye here was taken out by this particular bullish candle. The fact that it took out this high automatically will mark this place out as a break of what? As a break of structure. Break of structure in the sense of BOS. I hope everyone is with me. Are we together here? Are we together?
Yes, we are.
Yes, we're together.
All right, guys. So we had a kind of a network glitch right there. So sorry about that. But I hope everyone can hear me now. Can everyone hear me clearly now? I hope everyone can hear me clearly now. Can everyone hear me clearly now?
I can hear you.
All right,
Yes.
good. So let's go straight to. All right, good, good, good. All right. So what I was saying earlier was the fact that whenever we have a high been breaking out of, okay, we identify it as a break of structure. Now, a break of structure is when a high is actually taken out. So you can take it as a part of what a particular what's it called now? Part of the whole uptrend, and then just take it as that for now. Okay, so then let me just bombard you too much information. So when you see this high also taken out, let me use this. You can see this high. Price actually took it out. Price took out this high. So that signified another break of structure. Can you see that? So we had the BOS as well there. So like this is how you keep marking out the chart. Price broke out from this high at this point. You can see that. Then we can have a BOS, a break of structure. I hope you are learning. Are we learning? Are we learning?
Yes.
All right. Good, 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 good. Now we now see price just moving in a little bit of a trying to just create a downward trend and stuff. But then again, price broke out of this high again. So we then had another break of structure right there. You can see another break of structure in between that point before we now started having some more moves to the upside. So then we have another break of structure right here. I hope you can see that. This also was a break of structure. This is a break of structure, yeah. That's a break of structure. Despite the fact that that wick is just there, it's definitely still a break of structure. As far as price broke out of it, okay. Now we have another break of structure as well here. Each time price break out of a high, you can use this on lower time frames as well as higher time frames, okay. But now we are focusing on the 4 hours time frame, which is basically where our analysis is actually done, okay. So now there is something we now know as what change of character. What does change of character means? Now we've already established that break of structure simply means just the breakout of a particular high, right? Now a change of character is now when we are now having a shift in the market. You understand? We're having a shift in the market where the market is shifting from what? An uptrend then to a downtrend. How do you know this particular shift? This shift simply occurs when a significant low is taken out in the market. Okay, a significant low on an uptrend is taken out. So now looking at all these lows that we've created right here, first low. Now we're going to have another low here, another low here. I'm going to count this as another low here. You can see another low here. Now we can see another low here. Make sure you're paying attention to this. Then we can see another low here. So this is a low. Now if we zoom in clearly, we will see that this is also a low. Coming. This particular small portion here is also a low. Now, what is significant about every of these lows and what is very obvious about every of these lows is price has never actually come down to take out this low. Okay, price did not come down to take out this low. Neither when price came down, did it break this low? Did price break this low? When price came down from this particular point here, did they actually break out from this low? No, it came down there, created equal lows, then pushed up. This low didn't take out this low. This low didn't take out this low. This low didn't take out this low. Do you see that? But which low actually took each other out? This particular low here actually took out this low. Now, the moment that you have an uptrend like this, then there is a low part of the uptrend, which is part of the uptrend. Then a particular low came and actually took out that low. We can now have something called the change of character. Okay, very simple. We can now have a change of character. You must be able to practice all these things clearly before you understand this. So now, right there, we can have a change of character, which is CHOCH. Right there, we have a change of character. So now, for the fact that price took out this low, it then significantly means that what? We are actually changing the character from an uptrend to a downtrend. Now, if you now see that from that moment onward, what did we now start having? We started seeing lower highs and lower lows. Okay, started seeing lower highs. This high is lower than this high, so definitely this is a lower high. This low is lower than this low, so definitely this is a lower low. This high is lower than this high, so this is a lower high. This low is lower than this low, then this is a lower low. Okay, then we started switching this and this and this and that. Now, one thing that's also interesting is that you can also still have what break of structures in your downtrend. You can still have your break of structures in your downtrend. As far as price is breaking out a low on the downtrend, we can have a break of structure. You can see that a break of structure, a break of structure right here. You can see that, and so on and so forth. I hope you're understanding how I'm actually demystifying this chart. Are you guys there with me?
Yes, I'm with you.
Okay, so Solani is asking if is there no CH after the third break of structure? Basically, no. Are you actually talking about the uptrend, which is 1, 2, 3, 1, 2, 3? No change of character. Oh, there is. I can see that. I can see that. I can see that. There's actually this particular low that was taken out. Let's pay attention to this low. This low was taken out here. Thank you very much for pointing that out. This low was taken out. So we definitely add a CHOCH right there. Now, significantly, that particular change of character did not hold, right? That particular change of character did not hold. But because of course, immediately after that particular change of character, we couldn't see market create what a lower high. Do you understand? There was no lower high that was created after this particular CHOCH. So if you look at this here, I think this is the yeah. So we had 1, 2, 3. This low wasn't taken out. I'm going to be counting this place as my major low for this. Okay, I won't be this particular place. We could have actually associated it with a change of character, but no, I want to actually take this as a major low here. Okay, so then this low, then this particular wick here extended to this point, so I won't count this place as a low. So this is still the low. Okay, then the next low we add was this particular low. So then after this low, we started seeing price push to the upside. Now price actually did break through this particular zone here, which created a CHOCH, but then again it couldn't hold because we couldn't see subsequent what lower highs. Okay, have I answered your question? Have I answered your question right now? Anybody here that has a question for me? Any other person that has a question right now? Any other person that has a question? All right, good, good, good. So, is there any other question? Is there any other question, guys? Any other question? This can be very complicated. You have to be able to practice it, and then you'll be able to identify it in the market. Okay. Also, the market can actually shift in front of you while you are in a trade, so which can be part of losses. Okay, so certain losses do hold up because of the market trying to adjust itself to certain factors and so on and so forth. So you might be seeing a break of structure, this that, then immediately markets just want to create a particular change of character and just shift the whole things off of in front of you. So without any further ado, then I'll just guess that everyone now understand what a uptrend and a downtrend is, right? So without any further ado, I guess everyone now understand what a uptrend and a downtrend is. So higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So now if you look at let's look at let's look at what BTC is creating currently. Now let's look at the current market nature of BTC USD. So which is this part here. Let's pay attention to this part. What will we say the market is printing? What is it printing right there? What is the market printing right there? What would we say it is printing? Looking at that particular part portion of the chart. What particular trend is it printing from this point here to where market is currently? What is it printing? Anybody?
A downtrend.
Anybody? Good, a downtrend, of course. So why did you say it's a downtrend? Why are you choosing it's a downtrend?
Because of the lower lows, I guess.
Yeah, true. Exactly, because of the lower lows. Because of the lower lows. Which is very, very interesting because it has been having quite an issue to actually create a substantial lower highs. Do you understand what I'm saying? The highs that we've been seeing have not been so solid enough. You understand? So it's telling us clearly that the buyers don't even have any power over anything right now on this particular market. You can see there is no 4 hours candlestick on the bullish that actually ended well. Everything have just been bearish, bearish, bearish. So everything is currently pointing at what? Bearish. So until we see a significant what? Change of character. Now, you can also see a change of character when a downtrend is about to convert to an uptrend, okay? So we're able to establish that this is a downtrend, okay? Now, the fact that price actually broke out of this particular zone here, okay? Price broke out of this particular zone here, we can easily mark it out also as a particular change of character. Price broke out a high, broke out this high here. So we can see a particular change of character there, which tells us that what market is about to change its character from bearish to bullish, and then we can see what happened next is market still did not just continue creating higher highs. Okay, it came down again, created lower lows, created lower highs. Now we came back to this low to actually create equal lows. Consider which is where price is currently. It came back to this low to create equal lows with this particular descent, this particular low here. And then the next thing we will see is price break out of this high again. Can you see that? I'm going to mark out this week again and take this as a change of character again. So after that change of character, what have we now been seeing? We've now been seeing price moving in a sequence of an uptrend. So we now see higher highs, higher lows, higher highs, higher lows, right? Higher highs, higher lows, higher highs. Okay. Now, which after this, price took out this low again. I hope you're seeing how I'm marking this out. Price took out this low again, and then we had a change of character right there. You can see that, after which it has been creating what? Lower highs and lower lows. I hope that makes sense. So this is literally how market trend actually does work, and then it actually help you pay attention to what you want to do whenever you come to the market. So it, number one, it establishes your bias. Okay, let me just use that word. So when you know that we are in a downtrend, you want to look for what? You can see the main players in the markets are the sellers, right? So definitely, why don't you just continue selling? Okay, if you see that we're in an uptrend, the major players are the buyers. So why don't you just continue what? Buying? Does that make sense? So whenever you are actually in any of these positions or any of this trade setup, or considering taking a trade, you want to be able to make sure that you first of all have your trend established. Do you understand? You want to know if the trend is bullish or bearish based off of what? A 4 hours time frame. Now, what's interesting is we can now have a sub trend, because inside a trend there is a trend. As they talk, inside if you another if you the inside. I mean, so inside a trend there is what? A trend. So you can see a overall bullish trend on the 4 hours, but when you go to the 1 minute or the 5 minutes, you can see a bearish trend in it. You can see. Okay, don't let me even just talk. Let's go straight into the chart. Let's mark out this particular zone here. So let's mark out this particular zone here. Let's mark out this zone. I can see this as a downward trend. So if you go to the 5 minutes, okay. I hope I'll be able to see this. Good. So what do you see there? Not even talk too much. You can see this is on the 5 minute, and we can already see certain downtrends already inside that uptrend. Okay, you can see this particular trend here. This is a downtrend. Can you see that? That's a downtrend. This particular one I drew here also is a downtrend. You can see before there's a change of character right here. Then price moved and started going towards the upside. Okay, now you can see again that right here again is also a downtrend. Can you see? Right here is also a downtrend. Then we had a change of character, then price started pushing up again. Okay, now the beginning of the downtrend here, price broke out of this low aggressively and it started dropping, and since then we've been having what? Lows and lows and lows. Okay, so I hope this makes sense, guys. I hope this makes sense. If you go to the 15 minutes time frame too, you will see some trend inside some trends. Do you understand? You can still see uptrends inside downtrends. So you just have to be able to play your cards right and be able to practice these things very, very well. Does that make sense? So, without any further ado, do we have any question? Let me just take questions and then I'll proceed to the next thing I have to actually teach you guys tonight. Any question? Any question? No question? So I want to assume everyone understand what I have explained today based off of support, resistance, high and lows, and so on and so forth. All right. So since no questions, I'm going to go to the next thing, which is having to know that as much as you want to trade, you want to be very, very, very disciplined. Okay. You want to have something called a trading plan. Okay. Now you want to have a trading plan. Now, while you are actually growing as a forex trader, one of the major mistakes most beginners tend to make is not actually following in with their trading plan. So you have to have a plan. You have to have, that's what differentiates it from betting. Okay, that's what differentiates it from gambling. When you have a plan, you're working towards that plan. You're working with a plan, and you're not just coming into the charts just to gamble your way out of the whole situation. Do you understand? Now you're coming to the chat with a mindset of certain things being held at the back of your mind. Now, you want to know that part of your trading plan involves number one, if you have a pencil or a biro with you, go ahead and write it down. You have to understand that I'm coming. So number one is you want to understand that you want to have something called clarity. You want to be very, very clear. Do you understand? You want to be very, very clear. So you want to be very, very clear. You want to be clear. You want to be clear. You want to be precise. You also want to be. You also want to be um, consistent. The name of the game is consistency. For real, you have to be consistent. I show up every day, every now and then. Does that make sense? So precise, consistent. Coming. So when you are precise, consistent, you're clear, then you also want to know that you want to have something called discipline. Okay, you want to have discipline. You want to be disciplined. Discipline. Now, if you're not disciplined, then you will just find out that you are just on the chart, just doing what you want, when you want, how you want it. Okay. Now, so it's very important you pay attention to discipline. And then also, another thing is you want to pay attention to your strategy. Now, your strategy actually is left to you for real. I have taught everyone basically the strategy I use and the strategy that you should know as a beginner. So, the strategy you use will now be based off of you picking a particular strategy out of the ones I have dished to you. Do you understand? And refine it in a way that it resonates with you. And whenever you come to the chart, that is what you want to use. Okay. You want to be able to, number one, have back tested this strategy. You want to use it over time. You want to also journal how it wins. Do you understand? You want to also know that does this strategy actually helps me win? Strategy can involve support and resistance. It can involve trend line. My strategy basically, I use just three strategy. I use support and resistance. I use trend line, and I use Fibonacci. Do you understand? So you also want to develop a strategy. So for me, if I don't see markets on a trend line, I don't take trades. If I don't see markets actually coming out from a support zone or a resistance zone, I don't take trades. You understand? I always pay attention to this. If I don't see markets coming from a Fibonacci retracement rejecting off a particular zone of sort, I don't take trades. Do you understand? So you also want to refine yourself, put yourself in these shoes, stick to the grind. I've taught you Fibonacci, I've taught you trend lines, I've taught you support and resistance, I've taught you indicators, I've also taught you candlestick conformations, candlestick patterns. I've also taught you what other thing again? What other thing is there that you can use to make money right now, right now, right now? I'm not teaching you grammars. I don't have time for all that. If you apply um, if you apply this particular strategies that I have taught you, I'm telling you, you make profit. You will be very, very profitable. Okay, you're very, very profitable. So another thing is you want to be able to know that you want to analyze this market thoroughly. Thoroughly. You don't just want to come to the market and just be guessing. You want to come to the market with a mindset of what? Of understanding what you're doing. First of all, identifying the trend, knowing if it is bullish or bearish moves, knowing what your bias is. Do you understand? Once you've established that particular listen, you mark out your important zones. That's how I teach you. You mark out your support zones, mark out your resistance zones. Do you understand? After which, once you're done with that, you go ahead again and you look out for, okay, is there a trend line that I can draw that can actually connect this particular point to this particular point? Okay. Another thing is you have to look out for, okay, is there a Fibonacci that is telling me that once price reach the 50 of 0.5 mark or the 0.618 mark, then it's going to reject off that zones. Am I seeing candlestick reactions of these zones? Am I seeing the W pattern? Am I seeing the head and shoulder either inverted or the normal head and shoulder? Am I seeing the bullish engulfing or am I seeing the bearish engulfing? These are the questions you ask yourself before you do it, before you click on that buy button or sell button when you are trading off of yourself. When you're trading alone, which is my main goal, I want you to be independent. I want you to be able to look at the market and be able to analyze it yourself and make a decision out of it. And you can only do that when you've practiced and when you've built a strategy that works for you independently. You don't need to stress yourself. I already dished out the strategy to you. I already taught you everything. All you just have to do is go ahead and sit with these things for hours. Do you understand? So now, once you're able to actually establish your trading strategy, you also want to look out for something that is very important, which is risk management. Okay. Now, risk management is very, very important and can't be overemphasized. Like, it is the thing that is still keeping all my accounts intact, even right now that I'm having back-to-back losses. It is risk management that is what that's keeping my account intact. And if you are currently in my 100,000 naira to 20 million naira challenge, you will see that what we are actually doing there is proper risk management. We are still executing orders based off of what 0.01. So that's why our account is not blown yet. That's why that's why our money is not gone yet. If we've lost probably 10,000 naira right now, and then we still have 90,000 naira to trade with. So when you don't implement proper risk management, you find out that you just keep what? You just keep blowing accounts, losing money, and so on and so forth. So I'm going to show you how to actually do risk management using babypips.com. Okay. Now, babypips enables you to actually calculate certain things, which is very important for your trading decision making and so on and so forth. So when you're making your decision, you want to go to just babypips.com, then you can click on position size calculator. Now, right here, you can see that we have a particular calculator here that tells us that, okay, anyways, the amount we might be trading might be USD. And then if you're trading USD, I'm not sure we have Naira here, but if you're trading USD, you can easily use this. And then if you have $100, then you want to know that as someone who have $100 in your account, you want to be risking nothing more than 3%. Okay, you don't want to risk anything more than 3%, and you want your stop loss to be nothing more than probably 40 pips or 30 pips stop loss. Okay, then let's look at a pair. You want to be trading something very less volatile. Okay, you want to be trading something like GBP USD, and then you want to just or USD JPY, and then okay, let's use USD GBP USD. Okay, let's use GBP USD. So you click on calculate. Now it is telling you that if you're going to be using GBP USD and then you want to be risking 3% of your account for a 30 pip stop loss, you want to be using what 0.01 lot size. As you can see here, standard lot 0.01. So that is what you should use basically Oh, can you see my screen right now? Can everyone see my screen? Hello, can you
Yes, you
guys see
can
my
see
screen?
it. Yes.
Okay. Karim, can you see my screen right now? Can you see it clearly now? Okay, okay, okay. Okay, yes, yes, good. All right. So thank you. So basically now we have standard lot which tells us that we should use what 0.01. Now let's imagine we want to risk 50% of this account on a trade. Watch this. 50% of this account on a trade. Pay attention. When we were risking 3%, it showed us that we have $3 at risk. Okay. Now, if we minus $3 from $100, that means we have $97 left. Okay. Per adventure with stop loss. So then we have $97 left. But let's increase our risk to 50%. But let's increase our risk to, don't let us even overemphasize on it. Let's increase it to 20%. Now, good. See what it's telling us? It's telling us that if you want to risk 20% of this account on a 30 pip stop loss on an account of $100 and you're trading GBP USD, the amount at risk would be what? 20 USD, $20. Now, $20, good. Said your standard lot will be what? 0.06. Now, if you're risking $20, how many $20 can we have in 200? We can just have five. Do you see? We can just have five. Now, if we just hit stop loss 5 times back to back, boom, 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 it is very possible. Don't think it's not possible. This last week I've been having stop loss back to back. Do you understand? It's very possible. That $100 is gone. That $100 is what? It's gone. Now imagine somebody risking 50 pips, 50 pips, 50%, I mean, for a 30 pips stop loss, then, or somebody who is even crazy enough to be using 50 pips stop loss, you can see somebody who is very, very crazy and greedy and just 50 pips stop loss. Good. It's telling you that standard lot of 0.1. Do you understand? You want to risk $50 of this account, and then if price go against you, you're going to lose half of your account immediately. You want to be in this market for long. You don't want to be in here for a very short period of time. So for you to be long in the market, for you to stay long in the market, you have to stick to proper risk management. And having to use that proper risk management, your lot size is what is going to determine that particular act. So if we are currently trading, let's imagine now that we're trading this is another thing that actually matters. Let's imagine we're trading $100,000 account and then we're risking 1%. Now, for a 30 pip stop loss or 40 pip stop loss, 40 pip stop loss on GBP USD, so what is happening here? It's telling us that we're risking what? $1,000. You have $100,000 account. You're risking $1,000. How much do you have left? How much do you have left? You still have $99 to actually trade with. Do you understand? You still have $99,000 to trade with. So it's better off than having to risk even 10%. It's better off than having to risk 10%. So imagine you're risking $10,000 on a particular trade. That's a lot. So when you're actually trading, you also have to understand that you want to risk nothing less than 1% or 2% of your account, no matter the account size. Okay, as a beginner, I know majority of us start with $100. Let's imagine we're actually trading a $600 account, 2%, 40 pip stop plus GBP USD. It tells us use 0.03. Amount at risk is what? $12. If you hit $12 minus $600, you will still have what? You will still have probably $88 to still trade it. So these are what is very important when it comes to what? To understanding the market and knowing how long you can stay in the market based off of what support based off of risk management, proper risk management, not just risk management. So now you might ask, how do you know the pips for stop loss and so on and so forth? When you have your projection actually brought up on the charts, when you have your projection brought up on the chart, you can see how many pips is at risk on the projection. Okay, you can see how many pips is at risk on the projection. I wanted us to go in for short on BTC on this call, but I think we are late already. We are late to the party. Let's see what is happening on gold. All right, so gold is still here. I
I
mean,
can't
I
see
don't know
your
if
screen again now.
okay. I'm coming. Okay. I hope you can see it now. Can we all see it now? Good. Can we see it now?
Not yet. Okay, I can see it now.
All right, good. So now, when you when you have this particular projection brought up on the chart, this projection tells you whether you want to buy or sell. So when the red part is at the top and the green part is at the bottom, that means you want to sell. And then you can see the projection right here. You see long, short. So for long, it means you want to buy. You get it? You want to buy. Then for short, it means you want to sell. Okay, so now you can see that the red is at the top while the green is at the bottom. Why this one? The red is at the bottom, the green is at the top. Now if you tap on it here, you will see a figure. You will see a figure written down here. Can you see that figure? You see a figure written down here. So this figure actually shows you the amount of pips at risk. So for if it's gold trade, you don't want to count it in hundreds, you want to count it in tens. Okay, if you have 455, you want to count it in tens, you just count it as 45. Okay, now if it is GBP USD or any other trade like that, any other pair like that, you'll find out that you can easily have it in just the right way it should be. Okay, so if you have your buy looking out from here, you can see, so definitely right there, risking 25 pips, just straight and forward. To, then you can see here too that you'll be seeing 50 pips. Okay, so that's like 50.9, 25.6. So if you drag it down again, you will still see it there. As you're dragging it, it is increasing. Okay, then as you're dragging this one above, it's also increasing. So you can see that you'll be targeting to make 70 pips at this point. Do you understand? In the market. So I hope that makes sense. Does that make sense, guys? Does it make sense?
Yes, makes sense.
All right. Is there any question for me? Is there any question for me? All right. So since there is no question for me, I'll call it a night right there, and then I'll see you guys same time tomorrow. Thank you very much, Roto, for joining this on YouTube. And I mean, I'll send you a DM right now, and then we'll just talk about certain things. I hope you can hear me though. Thank you very much for joining till the end, and then I'll catch you guys next time. Okay, bye.
Bye. Thank you.
Yep, you're welcome.